Hey, welcome back to another weekly review. Man, Quint, it has been a tough week in the markets. Basically 4 days straight of down days. Today, kind of up and down. So what's happening?
A lot. First of all, welcome back, everybody. So we brought to you last week that volatility was on the rise. Obviously, we saw some significant tension between Iran and Israel. Iran launched a series of strikes, 99% of which was over the weekend, which was sort of foiled. And that seemed to kind of not be a factor. Markets, however, were still keying in on inflationary data,
Right.
and the idea that the Federal Reserve is not necessarily going to be cutting, and we've gotten some Fed talk to confirm that, so on and so forth. So markets are now grappling with two things. They're grappling with increased geopolitical tensions between Iran and Israel, which you can see somewhat in the oil markets.
Mm-hmm.
Touch on that in a minute. We're cutting this Friday morning, by the way, so that's important to note here. I'll share with you why. And then also the inflationary backdrop, which, again, still continues to be probably the number one market driving
seems
influence.
like inflation's entrenched. There's been CPI, PPI, retail sales numbers, all have been high.
And we're starting to get some earnings, which are not, again, to be expected. Our position, we continue to see erosion transpiring in the economy. I think the Fed I think the predominant data that the Fed is looking at is going to end up being delayed, and I think they're going to be late. And this is, the longer they wait to do this, I think the more damage. That being said, this pullback after such a strong run, and this is hard to digest. We talk about this on the radio and writing and even on these videos. Pullbacks don't come when things are great. Like, right. They come when there are things that are difficult, and we naturally extrapolate all the terrible things that can happen, and we tend to get worked up. Individual investors get worked up, very emotional. This is playing out, at least, I know it's hard to say, but this is playing out exactly like we would anticipate.
Right.
We get a strong run. Not many people are in. We're getting a pullback. In my opinion, I think what will happen, and this is totally a guess, and in my opinion, this will resolve. We'll probably get some economic news that's not hot. There will be talk about Fed cuts, etc. Markets will move higher, and it will draw people who are on the sidelines out and into the market. And again, I can see that happening as more and more money comes off the sidelines, because right now people who are on the sidelines are thinking, well, I feel great. I'm so smart. This is happening. I don't need to be in this crazy market until and if markets go back to highs.
Right.
And then all of a sudden they're going to go, gosh, why didn't I take advantage of that? And if that keeps happening, again, it's all psychology. If that keeps happening, money can come in. Now, why is this morning important? Well, it's Friday morning. Last night, there was news about the Israeli attack
on Iran
in retaliation to the drones and missile strikes. Overnight, U.S. futures, domestic futures were down considerably. Oil was up. It looked like we were going to have a very difficult opening this morning. By the time the market opened, futures had reversed to positive territory. Oil had come down considerably, and it seems as if the market is absorbing this. It's still be determined. It's going to be a long day. To be determined if this transpires. But again, my suspicion is these are the events that create the contraction that allow for the opportunities. So if you're out there, you're an investor. Again, we talked about this. We talked about this 2 years ago when we were going through a terrible market environment. Allocations should be appropriate. Diversification appropriate. In the right areas. If you're not sleeping at night because of this, then we need to revisit allocation, or you need to call your advisor and say, hey, I got to revisit my allocation, that sort of thing. If you're on the sidelines and have been on the sidelines, you're getting a pullback. And this is the pullback to go, okay, I've been intending to get in. I might now need to start adopting a plan to get in. There's one other thing I want to mention, and I find this very fascinating. And I don't know how this will play out. But every once in a while, we will run into somebody who says, oh, if I would have just bought XYZ, if I would have just bought this company. And we're not big individual stock fans for most of our business, index allocation, passive allocation. But listen, we go on CNBC, we talk about markets, I love stocks, etc. I don't know what will happen. Okay, but I want to give an example. Tesla. Okay, one of what was the Magnificent Seven. Right. They certainly have dropped out. Right. Okay, but what was one of the Magnificent Seven? Elon Musk was the wealthiest person in the world. Undoubtedly one of the most innovative companies. Right, maybe second to NVIDIA right now, but unbelievable. From its peak in 2022 at $415 a share, very close to it, $414 and something. It's trading today at $150.
Yeah.
That is a 65% decline. 65%. So let's say, I do not know, in full disclosure, I own the stock. I have bought a little bit more personally, right? We own it in some aggressive accounts, and I know some people who've had it. They've had it forever, etc. But let's say that in 10 years, we look back, and I don't know the answer to this. This is guessing. And Tesla's this unbelievable company. And somebody says, if I would have just owned Tesla, the question is, would you have held during a 65% decline? And this isn't the first.
Right.
But this has happened to Amazon, Apple, Microsoft, all the greats. Now we're seeing it. And so the question is, could you do that?
Right.
And the answer is probably no.
Right.
That's why looking in the rear view mirror and saying, if I would have just bought that, I always counter with say, well, would you have held through a 65% decline? Or when it got to 150, are you willing to hold your nose and do some buying?
When it looks really scary.
Yeah. So I just use that as an example. Not a recommendation, not at all. It's fascinating to me. Yeah. And I hope, this is what I hope, now I'm going to hope. I hope it does rebound. And I believe personally, I think it could be the most valuable company in the world someday. Not a recommendation. My point is, it'll be fascinating to come back to this video, and we'll either go, woo, it went down to 20.
Yeah.
It's out of business.
Yeah.
That's terrible. Or we go, well, that's the market, and now it's at highs. I don't know. I remember Meta doing that, though, just recently, and look where Meta is.
Right.
So anyways, I find it fascinating.
No, that's fantastic, and we hope this is helpful. I want to mention one more thing. We have a webinar coming up Wednesday of next week, the 24th. Quint and I are going to be doing a 1-hour webinar. It's from 7 to 8 o'clock. We're going to be talking about all things about the election, planning for the election, what we expect in the markets, what we think for, planning around that kind of time period and what we've seen in past history. It's going to be a really good webinar. We really encourage you to join it. We'll have the link below, so feel free to register for that. We look forward to seeing you then.
One more thing.
Yes.
Don't shut off. So join the webinar. It's going to be a great one. I think people are going to be really interested. We're going to look at a lot of history. We're going to look at a lot of market stuff. And it's going to be more about it's not our opinions. It's going to be more about this is the data. The way you disengage fear is through information, in my opinion. You disengage fear and you become a better investor with education. That's the goal for this webinar. Don't miss this one. It's going to be awesome.
Great. Thanks.